I think ETH goes 10, 20,000 before the end of the cycle, right? Once it's broken through, then it's a gap of air to the upside, and you have obviously all these digital asset treasury companies who are just raising money, and it's going to be even easier to raise money if the asset that they're buying has just broken through its all-time high and it's just ascending upwards. So I think Ethena can be earning hundreds of billions of dollars of revenue off of interest income from doing this trade. This is going to be one of the best performing stablecoins. I think Ethena overtakes Circle in terms of circulating supply by the end in the next 12 months. So it'll be Tether, then Ethena, then Circle, or whoever else.
Arthur Hayes doesn't mince words when it comes to where he thinks the biggest gains in crypto are headed. In his latest interview, the BitMEX founder laid out a bold prediction. Ethereum could climb to $10,000, even $20,000 before this cycle ends. He argues that once Ethereum breaks its all-time high, capital inflows from digital asset treasuries will accelerate, making fundraising easier than ever, the asset into a parabolic ascent. At the same time, Hayes is convinced that Ethena, the stablecoin protocol that packages up a long-proven derivatives trade, could surge past Circle and become the second largest stablecoin issuer in the world, right behind Tether. But Hayes isn't bullish on crypto in isolation. He ties this outlook to macroeconomic forces, specifically the future of Federal Reserve policy under Jerome Powell. In his view, investors shouldn't assume that Powell will easily yield to Trump's pressure or to the market's demands for rapid rate cuts. If anything, Hayes believes Powell may attempt to cement his legacy as a modern-day Paul Volcker, resisting political interference while standing firm against premature monetary easing. That stubbornness, however, could make markets volatile in the short run. Still, Hayes insists the outcome is inevitable. The U.S. government will find ways to inject liquidity, one way or another. Whether or not the Fed delivers traditional rate cuts, Trump's administration and its allies will have every incentive to push money into the system. Hayes points to creative, less conventional forms of credit expansion, methods that bypass the usual monetary levers, as a near certainty. And when liquidity returns, he argues, no sector will benefit more than crypto. Bitcoin, Ethereum, and assets tied to the stablecoin ecosystem could all be poised for dramatic appreciation. So in today's video, we'll explore Arthur Hayes' top cryptocurrency predictions for the coming years. From his forecast of Ethereum's explosive upside, to his conviction that Ethena could soon overtake Circle, and his macro thesis on how new waves of liquidity will reshape financial markets. If you find this kind of expert analysis useful, make sure to like this video and subscribe for more insights into crypto and the global economy. Thanks, and enjoy the video.
I mean, I don't particularly see that Powell has to do anything. And I've had this argument with a lot of macro strategists, and they have all sorts of reasons, whether it's, I think the funniest was, one very, very good macro analyst was like, yeah, Powell only makes $190,000 a year. Like, why would he take this sort of bullshit from Trump? And he's got to sell assets. Powell's supposedly worth like $50 or $100 million to fund his lifestyle, and he's just getting berated at work all day. Of course, he's going to resign in May 2026. And then you have every other people say, oh, there's a labor market. Oh, there's XYZ different macro variable says that the U.S. might be in a recession already, or will be in one soon, and tariffs are going to upend things and all this sort of stuff. And yeah, I get all of that noise. All these things are happening, but humans are weird, and at weird times, people decide that they have standards and have pride and ego. And if Powell really believes that he's Paul Volcker 2.0, what better way to prove that to the world and cement his legacy than having a big to Trump by, number one, not cutting rates, and number two, not resigning from the board when his chairmanship ends in May of 2026. So you could have a situation where Powell's sticking around past his past due date, and you have a bunch of other Democrat-appointed governors who try to obstruct Trump's policy. Again, I don't know the probability of that happening, but it's definitely something out there, and I don't think a lot of people are really handicapping that. Now, that doesn't mean that Trump investment won't be able to print the money the way they want to and figure things out. There's all sorts of games that the government can play when they really, really want to print money. So I just think there's a risk out there. I can't put a probability on it. Obviously, I think we're entering in sort of like this no-go zone, right? We have Jackson Hole on Friday. Powell is going to speak. People expect him to say something about what he's going to do in September. Is he going to talk about cutting rates? Is he going to say, no, I believe that rates are not restrictive and maybe they could go even higher? What's he going to say? We don't know. Obviously, the Treasury is still auctioning debt. The reverse repo is at zero. Markets are trading a bit weak, right? As start of the week, we're down 10% from ETH or whatever. So again, I think it's touch and go. Do I think we're going to be higher at the end of the year than we are today? Yes. So don't overtrade it. If you're in a position and you don't use any leverage, who cares? Maybe it's down another 15-20% by the end of this week. I don't know. If you've got some spare cash on the sidelines, it's a great chance to buy the dip. But yeah, do I believe that they're going to print money in the end of the year? Absolutely. Do I think Bitcoin's going to be 250,000, ETH maybe 10,000+ by the end of the year? Absolutely. But I think we have a bit of a choppy period coming between now and sometime in the fall.
If nothing else, it's just that he's tired of getting all this abuse. I mean, I got to be honest. Like,
are you sure about that? What has made you think that he's tired of getting all this abuse? Doesn't this prove that he's Paul Volcker? He's standing up to the man. He's going to keep the integrity of the Federal Reserve from the overreaching U.S. president who's coming in there and telling him what to do. No, I care about the dollar and all this other bullshit, right? Like,
so what's your base case? So wait, what's your base case? No rate cuts this year? One rate cut this year? Two rate cuts this year? What's the base case?
My base case is I have no idea. I'm just saying I'm not going to be over long or over leveraged long or putting up positions that I can't get out of quickly because I'm, dead set that the Fed has to cut rates because of these fugazi data points that people point out, right? You can argue it both ways. I just think that people are hoping that he's going to cut rates, and no one's considering the situation where Powell, for the first time in his career, says, I'm going to stand up for some principle and say to Trump. Because he cut rates during the presidential election to help Kamala Harris win. Obviously, she didn't. But, the labor market was strong. Unemployment was low. There was, above his target inflation, and he cut 50 basis points to help Kamala Harris. And the Fed went on record, some of the governors, not exactly Powell, but others saying the Fed should do whatever it's in its power to make sure that Trump does not get elected. So again, the people on the Fed board of governors don't like him. And so there is this possibility where they say, the market says 83% because of these data points and how we're, supposed to act. But that, I'm the head of the Federal Reserve, and I believe that this institution is above partisan politics, and therefore we're not cutting rates. I'm just putting that out there as a possibility. I don't have a strong opinion either way. I'm not trading based on whether the Fed cuts 50 basis points or not. Trump invested in so many other ways to juice the markets. And if Powell comes out in Jackson Hole, then subsequent to that in the September FOMC meeting and doesn't cut, then it just puts more impetus on them to go further afield in the types of creative ways that they can print money in the U.S. monetary system. And so, yes, we could have some short-term pain, but that galvanizes Trump and Besson to go more aggressive and more out-of-the-box thinking about how they're going to print money to advance their economic agenda. Myself and other commentators have, put out theories on what they could do and, different laws and different organizations that could stealthily add credit or print money, whatever. I've written however many essays about X, Y different ways and they can do it. I don't know what they're going to choose, but I sure as hell know that if Powell says, I'm not cutting rates, they're going to figure out a way to juice the markets.
Arthur Hayes' analysis of Jerome Powell is less about precise rate forecasts and more about the psychology of central bankers. He warns that too many traders assume the Fed must cut rates soon based on traditional economic indicators. But in his view, Powell's pride, ego, and desire to protect his legacy could delay those cuts, regardless of recession risks. Hayes even frames Powell's stance as a potential Volcker moment, one where the Fed chair refuses to bow to political pressure even if it rattles markets. That uncertainty, Hayes cautions, means investors should avoid over-leveraged bets and instead remain prepared for short-term volatility. Yet despite these warnings, Hayes' base case remains unshaken. The money printers will return. Whether through the Fed or through alternative policy mechanisms, he believes Trump and his allies will unleash extraordinary amounts of liquidity to secure economic growth and political wins. And once that liquidity flows, Ethereum and stablecoin protocols like Ethena stand to benefit disproportionately. This is where Hayes shifts from macro to micro, laying out why he believes Ethereum and Ethena could lead the next leg of crypto's bull run.
Do you see like a massive catch-up trade? Do you see ETH also doing like a 70% above its previous all-time high and going up to like, I don't know, 5, 6, 7,000 before the end of the cycle?
I think ETH goes 10, 20,000 before the end of the cycle, right? Once it's broken through, then it's a gap of air to the upside, and you have obviously all these digital asset treasury companies who are just raising money, and it's going to be even easier to raise money if the asset that they're buying has just broken through its all-time high and it's just ascending upwards. So I think that the sky's the limit, and that really depends on how much capital these companies can raise, how much money they're going to print. I'm not a 4-year cycle guy. If the cycle will last however long the cycle lasts, I don't think Trump has really. They haven't gotten into their groove of how they're going to print money yet. They're putting in all the pieces. They're teasing different ways in which they can do it. They're telling you, hey, we want to run things hot. Here are different ways where he's throwing things at the wall, seeing what sticks in terms of ways to print money. And I think once we get through this Fed question, who's the head of the Fed? How many governors does Trump have that are loyal to him? Does he fire Powell or for cause or some other people, right? There's different ways and he can get what he wants. I think that gets resolved sometime in the middle of next year. And then we have from middle of 2026 until Trump leaves office for them to go absolutely insane with how much money they're going to print.
So you
cannot win an election without printing money. And the Democrats are going to print money. And so he has to print money. If he doesn't hand out the goodies, then all his boys are not getting reelected.
So you believe that this could be a very protracted cycle. In other words, abandon the 4-year cycle. Trump, you're saying, has got off to a slow start, so to speak, in terms of being able to implement his massive growth plans. And that could actually take the cycle all the way, maybe even towards 2027, 2028.
Correct. My base case is we are going to have a massive bull market in all types of financial assets connected to anything that Trump believes is important between now and when he exits office. Because, again, he's got to win an election. He's got to win an election in 2026. The only thing voters care about is their wallet. Am I richer today than I was previously? And if I'm not, if I don't feel like I'm advancing economically, then I'll just choose the other guy. So they chose the other guy, Trump over Biden, and they're going to choose the other guy. Pick your congressperson or senator who's running in 2026, who is the Trump heir in 2028 versus whoever the Democrat is. Right, the Democrats are saying we're going to print money. Right, look at Mamdani in New York. You have AOC. They're ready. Right? We're printing money. It's socialism. Come on, let's go. Like, we're giving the goodies. So Republicans, you giving goodies? You're not giving goodies? Okay, I'm staying home. I'm not voting.
Are you still very bullish on Ethena? Because it sounds like they're making all the right noises.
I'll move a little bit higher. So I have a macro thesis around stablecoins. I'll be speaking about this in Japan on Monday. The essay that corresponds to the presentation will come out Monday or Tuesday next week. And essentially, I'm arguing that people are not thinking big enough and how Besant and co are going to use stablecoins to reverse some of the de-dollarization. And by that, I mean take euro-dollar flows and bring them onshore into the US and bank the global south and give them dollars, even if their regulators don't want them to have them. And they're going to use a stablecoin as the means to do it. And what's the point? Well, a stablecoin has to earn yield for the sponsor, for the issuer, and so they're going to buy treasury bills at whatever rate Besant is selling them. And so I think that, and I'm going to argue the nice round number, I think that by the end of 2028, we have upwards of 10 trillion in circulation on stablecoins in aggregate, dollar-pegged stablecoins. And what does that mean? And in the essay and the presentation, I'm going to talk about Ethena, EtherFi, and Hyperliquid. The first thing people are going to want to do when they've got a stablecoin after they've got 2-3% yield on the T-bill from the issuer is reach out on the yield curve for those who are so inclined. And the safest, and I use safe in quotation marks because of course there's risk in all of these trades, the safest endogenous yield within crypto is lending money to speculators. And that's what Ethena is. It packages up a basis trade where you go short a perpetual swap or a fixed date future versus long crypto, Bitcoin, ETH, SOL. What are you doing? You're lending money to speculators who want to go long, and they're getting paid for it in the terms of a yield embedded in this derivatives contract. This trade has been around since crypto's been in existence. I've been talking about it for over a decade. The guy at Athena and his team are just the ones to package it up in the right wrapper, and a DeFi wrapper, make it easy for people to buy this thing. So I think Ethena can be earning hundreds of billions of dollars of revenue off of interest income from doing this trade. And once Ethena starts, buying back their token, I think per their proposal, they have to hit one more exchange listing or something before they activate the token buybacks. Then Ethena goes up, is mooning, right? And so I haven't finished the model yet, but I think this is going to be one of the best performing stablecoins. I think Ethena overtakes Circle in terms of circulating supply by the end in the next 12 months. So it'll be Tether, then Ethena, then Circle, or whoever else.
For Ethereum, Hayes' conviction stems from the structural dynamics of capital. As he explains, once Ethereum clears its previous all-time high, it becomes far easier for treasuries, funds, and digital asset companies to raise and deploy capital into the ecosystem. That positive feedback loop, where rising prices attract more capital and more capital drives prices higher, creates the conditions for exponential growth. To Hayes, this is how Ethereum could stretch well beyond $10,000 and potentially toward $20,000 in the years ahead. Importantly, he dismisses rigid 4-year cycle theories. In his mind, the length of this bull market will be determined not by halving dates, but by political incentives and liquidity flows under the Trump administration. When it comes to Ethena, Hayes argues it represents the next evolutionary step in stablecoins. Unlike traditional issuers, Ethena packages a basis trade that has existed for over a decade, shorting perpetual swaps against long spot positions, and delivers the yield to token holders. By offering safe, embedded yield within crypto itself, Ethena doesn't just replicate the model of Tether or Circle, it improves on it. Hayes believes this model could generate hundreds of billions in revenue, fuel aggressive token buybacks, and push Ethena to overtake Circle in circulating supply within the next 12 months. By the end of the decade, he envisions a world where stablecoins as a whole reach $10 trillion in aggregate supply, becoming a backbone of the global financial system. Taken together, Hayes is painting a picture of a crypto market entering its most powerful phase yet, not simply because of speculative momentum, but because of structural shifts in how capital is raised, stored, and multiplied. Ethereum and Ethena, in his view, are at the center of that transformation. Whether or not his price targets are met, the logic behind them underscores a bigger story: crypto's growing entanglement with global liquidity, monetary policy, and geopolitical strategy. So what do you think? Will Ethereum really surge past $10,000, and could Ethena become the world's second largest stablecoin within a year? Drop your thoughts in the comments below. Don't forget to hit the like button, subscribe if you haven't already, and turn on notifications so you never miss updates on crypto's biggest macro trends. Thanks for watching, and we'll see you in the next video.